Hello guys, welcome back to another video today, and today we're going to be talking all about trend lines and the importance of accuracy when drawing and mapping out trend lines. Now, trend lines are sort of the first thing you learn about when teaching yourself trading, or when you go onto YouTube or whatever and learn the how-to of trading, sort of day one thing. But there's a few things people get wrong. And I just want to cover those today, just to make sure, if you are a new trader, that you're drawing your trend lines properly and how important accuracy is when mapping them out. Okay. So what is a trend line? Literally, the definition is in the name. A trend line is, to put it simply, a line you can draw and edit on a market chart to better identify the trend direction. So to put it simply, you draw a line to identify where price is going. So if you draw a line that goes up, where price is going up. If you draw a trend line and you are going in the downward direction, price is going down. All right, it's very, very simple. But accuracy is very important because it ups credibility in, sort of confluences, for yourselves when setting up potential trades. All right, and we're going to go over credibility and the importance of it a little bit later on in the video. This won't be a long video, by the way, because I feel like I owe it to you guys after doing 2 half-an-hour videos. I think I'm going to keep this one nice and short, but I want to make sure you get the information also. All right. So trend line makes analysis a lot easier. It ticks boxes such as you can work out market volatility, you can work out the respect of a trend line, market direction, zonal levels, etc. So what I mean by volatility is, I'll show you in the examples. It'll be a lot easier for you guys to understand what I mean by that. So let's move on. So how do we draw a trend line? So first of all, we've got to identify the trend, and obviously by just using your eye, you can see that that market is in an uptrend. All right. So you can use a free tool to draw up a trend line on TradingView. I think it's the second one down after your cursor on the left hand side. I'm not too sure. It's pretty easily accessible, and you can literally map out a trend line on whatever chart you're looking at, whether it's forex, stocks, whatever. So rule number one of a trend line is to try and get the most touches of the candle tops. All right, so basically what I mean by this buy and sell is when you're drawing a trend line on the uptrend, you get the tops of the candles, yeah? When you're drawing a downtrend trend line, you get the bottom of the candle. All right, I think that's a silly example because you can draw 2 lines either side. Ignore this buy and sell bit, okay? Just try and get the most touches of candles, okay? Forget about that bit. So remember, the more touches you get, the more credible the trend line is, the more information you're going to take away from your analysis of a trend line, okay? So here's an example of a trend line. All right, we're just going to cover this recent price action to start. So rule number one, how many touches have we got of this trend line? We've got 1, 2, 3, and possibly a 4th touch. That's the most recent. That's the most recent price today when I was making that video. That's where price was at. Not sure if it's come up to revisit that trend line, but that could possibly be a nice entry if you trade trend lines and you've got extra confidence to maybe write it down to the sell. Personally, it's an uptrend for me, so I'd probably be a bit cautious about trading this because, as you can see, the momentum after each retest is getting smaller and smaller, and we've got sort of like a wedge forming. So for example purposes, this is how I would map out a trend line, and maybe wait. Actually, we'll go on to that later because I'll give away the video otherwise. So we've got 4 touches. It's a pretty credible trend line, yeah? Very credible. We can get a lot from that trend line, all right? So what you shouldn't be doing, and this is where people go wrong, I see this a lot when people sending me in charts and saying, does this look good or whatever. I see this a lot, and guys, you really shouldn't be doing this, okay? If you do this, take a little more time with your trend lines, all right, and just make sure you're making sure you get the tops of the candles, all right? So first of all, again, you've got to identify the trend. We've done that. It's up, All right. Use tool and trading view. This is what I see people doing. Okay. Now, the reason I say not to do this is because with trend lines, you're looking for some form of respect for that current trend. And you're also looking for a potential break of a trend line, of your trend line, to signify a possible shift of the market momentum in the opposite direction. So what I mean by that is we just scoot back here a little bit. So we've got a trend line here, yeah? And because the market we've already identified is going up, so realistically, we want to be looking for that buy, and we can see the momentum is, sort of wearing out after each retest. So what I mean by a break is if price clearly breaks past this trend line, as you can see here, see if it gets up to this sort of point. We know there's a momentum shift and it's now not respecting our trend line that we've drawn out. So we know we want to now be looking for a buy. Okay, and I'm going to show you an example of a break and that shift of momentum in a second. So this information is not credible because we now have 4 breaks of our trend line, and you could now possibly turn away from that market because you've seen 4 breaks, and a break of a trend line, it downs its credibility. Just literally by not taking care of how you're drawing trend line. Okay, it's a big mistake because at the end of the day, you've now missed 4 potential sell entries because of the inaccuracy of your trend line. Obviously, I say you missed 4 sell entries. Obviously, you want to make sure you're doing extra confluence, okay? But for the purpose of this video, we've got 1, 2, 3, 4 potential sells, okay? We'll say 3 definite ones because obviously after all these touches, yeah. But what I would advise, guys, is if you are trading trend lines, I'd wait for a minimum of 3 touches. So we've got 3 touches here. After the 3rd touch or including the 3rd touch, then maybe start trading it, because if it's, the likelihood of 3 touches and a 4th one doing the same is very likely rather than 1 touch, because 1 touch could be false information and it could come back and just absolutely obliterate this trend line. It's a bit too risky for me. So wait for maybe 2 or 3 touches, or maybe 2 confirms it for you, and the 3rd one you trade it, whatever. But for the purpose of this video, we've missed 4 entries. Yeah. So let's assume price is coming down after that. All right, missed 4 entries just because of the inaccuracy of the trend line, and because of the way we've drawn our trend line, we've got 4 breaks of that trend line. So we're now going to walk away because we've seen 4 breaks. All right, literally I see that a lot, and I just wanted to cover it in this video because you shouldn't be doing it, guys, because there's you're missing out on money here. All right, so that's not a credible trend line in my opinion. All right. So what confluences should you be looking for when trading trendline setups? Now, as I just said, you want to look for a minimum of 3 touches, 2 or 3, just to be safe, okay? Because after the first touch confirms nothing. You want to wait for more confluence in the 2nd or 3rd touch. You want to look for clear respect on prior visits. Now, what do I mean by that? So it covers the 3rd point as well. You want to see clean price action, and you want to sort of see, actually, all of these 3 cover each other. So you want to see respect, clean price action, and weakness when price is revisiting your trend line for the 2nd or 3rd time. So, so you see here, you see price is very, undecisive of, that's the non-credible trend line, hang on. So this trend line here. So you see price is very weak going into that trend line, and we know that that's the top. And it's also sort of weak going in here. It's not really very strong candles. Yeah, it's sort of undecided. So this bit of formation here, what you'd want to do is, because it's not really that weak. Yeah, you're seeing some strong bullish and you're seeing some strong bearish candles. So what you could do is go on to the lower time frames and see if you can identify some sort of weakness as price revisits your trend line. Okay, because that is an extra confluence saying, yep, it's weak on the ball. I want to look for a sell, all right, because the market is showing signs of being very bearish as it revisits my trend line for the 2nd or 3rd time. It's an extra confluence for you guys, yeah? So make sure there's not been a clear break of that trend line, because as we know, if a break of a trend line occurs, the trend line is no longer credible, okay? So here, say for example, that trend line is a good trend line. We've had breaks of it. It's no longer a credible trend line, all right? So avoid volatile markets. Now, what I mean by volatile markets is, let me see if I can get a tool here just to show you. Just going to draw this one. Right, so we'll go down, we'll go to this one here. So say we've got a nice trend line like this, yeah? And we've got price coming in like this, like that, yeah? So that's a nice clean price action trade, all right? What volatile markets can do is, oh, that is absolutely terrible, that is. All right, hang on, give me a second, guys. Let me just erase that. Right, so what volatile markets can do is you draw your trend line like that, and it could go like this, but still follow the same trend. All right, that is a very bad drawing. I do apologize. I'm just going to go back into the slideshow here. So, apologize for the drawing, but a volatile market could follow the same direction as the clean price action. However, it could break your trend line multiple times, and you know, if you've got stops above your trend line, it's going to stop you out, okay? Because the market is very choppy. Yeah, it wants to follow that direction. However, current circumstances is making it very, very volatile. And obviously, we know volatile markets are very unpredictable. And you know, if you've re-entered multiple times, you've been stopped out every time, but the market still follows the same direction. So that's why I say look for that clean price action. As we see here, it's not very volatile. Yeah, it's not very, you know, it's not very eager, you know, to get where it wants to go. It's showing you clean signs, it's showing you clean retests, and you know, overall it's a very clean chart, okay? And we want to look to trend that. All right, let me just go back to the other slide here. Oh, I've done it again. I've actually done it again. All right, there we go, that's better. So avoid volatile markets and make sure you're trading with the trend, okay? Because the trend is what, guys? Your friend, okay? The trend is your friend. Get that into your head. And again, I know it's cheesy, but absolutely correct. So what I see traders doing sometimes, and this is not a bad thing at all. I'm not saying it's a bad thing, guys, okay? So if you do this, you know, crack on, because you're taking a more conservative approach to trading, all right? But if you're more of an aggressive trader, I'm going to teach you how to use that aggressiveness for the better good, all right? So what I see traders doing sometimes is being too cautious and conservative with their trend lines. And let me show what I mean. So we've got the same chart here, but now we're going to focus on the actual uptrend itself, okay? So not this sort of recent bit here, we're going to focus on this bit, all right, to get a better perspective of what I'm trying to talk about. So we've identified a trend, it's up. So there's a trend line. Again, nothing wrong with that trend line at all, all right? If that's how you would map out this chart, mate, you're doing good, all right? That's not a bad trend line in the slightest, all right? Look at that. That's a very clean trend line, very, very nice, okay? So I call this a cautious approach because, as you can see, we're on a daily chart here, all right? Now, again, like I said, it's not an entirely bad thing if this is how you map out, you know, your trend lines. I'm just saying for the higher time frames, you may want to look for a more, you know, sort of, how can I put this, more recent sort of approach to this, okay? Because for price to revisit the top of your trend line again, you know, it could take a while because this is the daily chart, all right? If it's on a lower time frame, this sort of layout for a trend line is fantastic, okay? Because, you know, at some point in that week, say if you're doing the 30-minute, 15-minute, or 5-minute time frame, at some point during that week, price is going to revisit one of your levels, all right? And you can make a decision on, you know, obviously using the higher time frames, identify the trend, and then use your confluences to set up a trade upon the retest of one of these levels, yeah? But for a daily time frame, you can see we've had one touch there, and that's all we've had based on this chart. We've had a touch there, had a touch there, and we want to really wait for a third touch. But we don't know. Price could consolidate around here. You know, that's gone a few weeks now, and then you retest around this area. Now, you know, it could well come down right now, and that's your third touch. But it could run around this level, touch here, and all, you know, for as far as you guys are concerned, that's another month or 2 months gone. You know, just waiting for one trade. All right. So like I said, guys, it's totally not a bad thing if you do this, okay? It means you're sitting on the sidelines waiting for a better entry point. And that's a good thing, because if you take a more cautious and conservative approach, you know, that's better than losing money and rushing into trades, all right, if you're not comfortable with it. So I'm going to show you how to take a more aggressive approach on the higher time frames, okay? Because we want to focus on recent price action. So remember, guys, we're not focusing on this bit here. We're going to pretend price is at this red candle, all right, this one right here. So forget about all this for now. So identify the trend again, it's up. And this is a revised trend line I've drawn out, okay? So again, ignore that for now. We're not focusing on that there. But focus on this trend line here. So, have we got a minimum 3 touches? Well, we've got 1. Excuse me, we've got 1, we've got 2, we've got 3, we've got 4, and we got 5. So what is that? It's a credible trend line, okay? Now, what have we got here? We've got a break of that trend line, okay? So, what does that mean? Break of the trend line means it's no longer credible and you should avoid buying for the time being, okay? It's literally that simple, guys. So, if you take that more conservative approach where your trend line was down here and up here, so we've got our 3 touches quite early. So you've missed out on possibly 2 or 3 potential buys here. All right, and that's just this daily chart, so it's a lot of pips, even though it doesn't look like it. So being overly cautious would have cost you 2 potential entries to the upside, 3 if you trade the 3rd touch. Now, aggression is okay if your confluences support it, so don't obviously just use the 3rd touch as your confluence. Obviously, if you trade like that, that's, you know, it's part of your strategy. You crack on. Personally, I'd probably look for more confluences. Maybe if this is a, you know, a previous level of structure, I'd probably look to maybe trade the 3rd touch. But remember that sitting on the sidelines is not a bad thing if you're not comfortable taking the trade. So if you're not comfortable taking this 3rd touch, and you're a more conservative trade and rather wait for the longer term 3rd touch, you know, a couple of months down, a couple of weeks down, that's absolutely fine, guys. I'm not saying that's a bad thing, because, you know, you're going in for the more pips, yeah? So if you trade the conservative approach, you're going to get a lot of pips, you know, rather than trading the more aggressive approach, all right? Well, the purpose of this video is just to show you how to draw trend lines and make you understand what's credible and not credible, okay? So this is a common question I get a lot, and I just want to clear this up today. It's also a very, very good question. So if you do have this question, I'm going to answer it for you now. So surely this trend line is not credible as price pushed through it, excuse me. So you can see these candles at some point did push through this trend line, okay? So the question I get is, you know, it pushed through, so it's no longer credible. And my answer to that would be, price pushed through, yes, 100% it pushed through, okay? But the candlestick closed. Remember, there's 4 parts to a candle, okay? The high, the open, the close, and the overall low, okay? We need to focus on the open and close. So price pushed through, yes it did, as you can see at these 2 points here. But the candlestick closed on our side of the trend line, okay? Which still makes it a credible trend line. So price got rejected and respected our trend line. So that's what I talk about, the respect factor. That's what we're looking for. So it tried to break through, it couldn't, and it closed on our side. So it still makes it a credible trend line, all right? So when the candle breaks our trend line and closes clearly on the opposite side, we take that information as a shift in momentum. You can either sit on the sidelines, readjust your trend line for the more conservative approach, down here to down here, or simply walk away. No choice is the wrong choice, okay? But when you see a break like this, you want to sort of readjust your way of thinking, all right? So that's when we draw the smaller trend line at the top and maybe look for those 3 cells that we identified earlier. So if a candle pushes through but closes on our side, it's still credible trend line, guys. Just want to clear that up for you, okay? So as you can see, the break of our trend line was a good warning. So over here, it was a good warning of this shift before it even happened, all right? So if we saw a break of that trend line and we're in a buy trade, and say we entered on this 3rd touch here, you know, we want to get out up here, bag those pips and get out, because we don't know what price is going to do next. It could, you know, see you later. It could also shoot up, but at least you know you've got out safely when you saw a break of that trend line, because what does that mean? it means a shift in momentum, all right, or possible shift in momentum, should I say. So, just a small recap. So we've learned how to identify the trend by using trend lines. We've seen a conservative and aggressive approach to setting up potential trades. Just make sure you tick off your confluences for entry, guys. So the direction, the touches, the credibility, the respect, the clean price action, no clean breaks in previous price action, and so forth. If you use indicators, use them as well, because the more confluences you get, the more chance your trade is gonna, show you a win. Yeah. So remember, breaks of a trend line can signal momentum shift. All right. So if you see a break of a trend line, either readjust it, or if you physically can't readjust it, just sit on the sidelines, wait it out, or move to a different pair if you trade another pair. All right, and just walk away. All right, because the last thing you want to do is make up a position that's not even there. Yeah, and so what I do see some traders doing is they see a break like this, and then what they'll do is then say, oh, you know what, it's not much of a break, so it's still an uptrend. But if you entered here, it'd be a very silly thing to do, because you would have been stopped out straight away. So always make sure you look for these sort of breaks, because especially when you've got big bearish candles or big bullish candles for the opposite sort of flip side of this, because a break could mean a momentum shift. All right. So if a candle breaks a trend line, wait for that candle to close before making a decision and setting up a potential entry, as price could reject the break, as it did on these two occasions here. Didn't break our trend line, it rejected and closed the other side, okay? Excuse me. So it could reject the break, it could reject the break and close on our side of the trend line, meaning your trend line is still a credible confluence, okay? Always remember that. So remember, use lower time frames to snipe a fantastic entry position. Now, if you don't know what sniping is, I did make a video on that a couple of days ago. Go and check that out, because you can use that with this and create two incredible confluences for your entry. All right. And of course, guys, make sure you use risk management. Risk management is in my previous video as well, where I covered risk to reward, stop loss, take profits. I will do a proper, long breakdown of risk management and sort of the best ways to set up trades on top of sniping positions. All right, but we'll do that in the future at some point. But guys, just remember these points here, because they're the main points of the video. And remember, accuracy when drawing trend lines, it's a good thing, because ups credibility, and you don't overlook, you don't miss trades, yeah, because of, you could miss trades just where you've drawn that trend line, okay? Just remember that. So we're just going to look at some other setups from a few various pairs and identify the trend using trend lines, just so if you've never seen a trend line before, just so you sort of get familiar with what a trend line is and how you should draw it, yeah? So let's examine a few more examples. So we've got an AUD/USD chart here on the daily as well. So, uptrend, right? Look at the way we've drawn our chart here. So we've got one touch, two touch, three touches, all right? So maybe on the third touch you want to, well, to be fair, in an uptrend, I probably wouldn't look to sell. But if you are a trend trader, you probably look to sell on this third touch up here. At the bottom line, we've got one touch, two touch, three touch at the moment, all right? So on this third touch, you'll probably, myself, I'd probably look to enter there, because look, you would have bagged a lot of pips, all right? So that's how you would draw a trend line on this market here, yeah? Because you've got loads of touches. It's incredibly credible source. Remember, look, we've covered, if you want, you shouldn't really put the trend line on top of the wicks here, yeah? So don't worry about the wicks. We'll focus on the bodies, all right? The bodies are what you don't want to chop off, if that makes sense, yeah? So if you've just got the wicks at the top here and you want to make a more credible trend line, just move it down a little bit to where it is here. You've now added an extra touch to your trend line, which could have been your entry, all right? But had you kept your trend line up here, this would have been the second touch, and you would still be waiting for that third touch to maybe trade it, all right? So same thing here. You wouldn't have got this touch in if you had moved your trend line down to the bottom of these wicks here. You'd still be waiting for that third touch, which again, like I said, it's not a bad thing. It's just a more aggressive approach and more accuracy in your trend lines. You could pick up more positions, all right? So this is USD CAD trade, not trade, market on the daily chart. I'm just going to show you how to draw a downtrend trend line. So this is a bit different, okay? And a key point I've actually forgot to put in the recap slide is you want to focus on the most recent price action when necessary. All right. So what I mean by that is this. I'm going to go into this again. So what I mean by that is, give me 2 seconds. I'll get out the pen. There we go. So what I mean by that is, so some people will draw their trend line like this at the top there, which again isn't a bad thing at all. All right, and they might want to draw it from here, which again isn't a bad thing. And what they would do is channel it like that. All right. Now, what I mean by focus on recent price action is you're missing out on these sort of lower highs here. So if we just go back to where that was, the way I've drawn out this trend line is to focus on the most recent price action, okay? Because when necessary, we can cover all of these lower highs in our trend line. We can cover these most recent lower lows, because at the end of the day, we want to focus on the most recent price action. Yeah, it's basic stuff. So now we've got 1 touch there, we've got 2 touch there. Now we've got 1 touch, 2 touch, 3 touch, 4 touches on our upper trend line. Yeah. So we've now identified that it's a downtrend, and we focused on the most recent price action. All right. So guys, I hope that has covered trend lines for you. And if you didn't know what they were, you know how to draw them, map them out, and map them out with credibility instead of potentially drawing them the wrong way and missing out on potential positions for yourself. Of course, as usual, if you have any questions, leave a comment down below and I'll get back to you as soon as I can. Or as always, if you want to send me a personal email, there's my email address, and I'll get back to you on there. So guys, have a fantastic week. Good luck on any trades you take, and I'll see you in the next video. Peace.